Hi, I'm Lee Stone and this is your UFXBank Week in Review. Today we will be covering some of the major financial events of the past week and how they impact the global currency markets. Before we cover headlines of the week, let's go over the last week's risers and fallers. The euro began the week trading down against the dollar but began rebounding on Wednesday to close up 0.19%, last trading at 127.33. The British pound also opened the week trading down against the dollar, and though it rebounded some, the pair still closed the week down 0.12%, closing at 155.14. Like last week, the USD and Japanese yen traded mostly mixed. By the end of the week, the dollar had dropped 0.36% to close the week at 85.33. The US dollar started the week strong against the Canadian dollar, but surging oil prices boosted the CAD, leaving the USD with minimal gains, up only 0.34% on the week, last trading at 105.21. Oil finished the week strong after tumbling on the first couple days of trading. It last traded at $75.17 a barrel, gaining 2.3% for the week. Gold also had a positive week, moving up 0.83% to close at $1,238 an ounce. The beginning of the week saw a continuation from last week, with US dollar surging against everything but the yen. As the week progressed, most of the majors began pushing back against the USD and closed the week with either minimal losses or minimal gains. Speculation of the Japanese government's intervention into curbing the yen continued to make headlines this week, but to date, no actions have been taken. Fed Chairman Ben Bernanke spoke at the annual Monetary Symposium held in Jackson Hole, Wyoming, where he discussed in detail his thoughts on the U.S. recovery. As this is sure to be the topic of discussion at your local water cooler, let's go now to analyst Martin Smith. Martin, how are you?
Very well, thank you, Lee.
So, what can you tell us about the current state of the U.S. economy?
Well, Bernanke's main points at the symposium were that economic growth has been too slow and unemployment has been too high. Well, this might seem like stating the obvious, but let's look at the facts on the ground. On Friday, the US Commerce Department lowered its growth forecast for a second quarter to an annual rate of 1.6%, down from an earlier estimate of 2.4%. Economists are estimating that unemployment will increase to 9.6% in August from the previous 9.5% in July, indicating a step backwards, and another sign the US recovery is losing steam. Now, one could argue, as some economists have been, that the lack of hiring and poor manufacturing output is a result of fears that the recovery is faltering. However, a more disconcerting statistic is that of existing home sales, which fell a record 27% in July. Now, consumer spending has also been weaker than expected, which has arisen due to a lack of consumer confidence in the economic situation.
Wow. Well, is there anything positive that you can tell us about this?
Positive, yes. Well, I don't want to seem overly pessimistic. So on the positive side, let's see. Bernanke did mention that the preconditions for growth in 2011 are in place, and that he's prepared to take unconventional measures if the situation were to deteriorate dramatically. Investors reacted well to the Fed chairman's pledge to safeguard the economy, and it did spur a rally in the US stock markets. So I think that as long as investors can see a rate of improvement in the situation as a whole, confidence will increase and we'll hopefully be back on track.
Well, we've talked about this now for a few weeks. What is going to happen with the yen?
Well, to be perfectly honest, I think intervention is quite likely, but it's ultimately, of course, anyone's guess. The government's decision to intervene is going to be wholly contingent on outside influences. What I mean by this is that the increasing rise of the yen is not based on the strength of the Japanese economy, but rather on the safety of the currency itself. Now, the situation is quite interesting in that the Japanese economy is heavily dependent on exports, but the rising yen makes consumer goods prices more prohibitive at a time when consumer spending is at a disconcerting low. So far this year, the yen is up 9% against the dollar and up 22% versus the euro. I don't see how they will be able to improve the situation without taking action to weaken the yen. Unfortunately, it's not so clear that they can effectively do it alone, and the prospects that the US Treasury and European central banks will help are, well, to say the least, a bit unlikely. So both the US and ECB would prefer to keep their currencies low to help bolster exports, which is helping to keep their own recoveries afloat. Now, Japan's Prime Minister Naoto Kan said that he is prepared to take bold measures if necessary to correct the situation, but that may not be enough. It didn't work for the Swiss government, and neither did it work for the franc. And of course, the Japanese know this. So, bottom line, it'll be interesting to see what happens next and if they can get others on board with them. So,
well, thank you very much, Martin. We hope you enjoyed our weekly review, and we hope you will join us next week. Until next time, be sure to visit us at UFXBank.com for simple, safe, and secure trading. Also, you can follow us on Twitter and Facebook. To submit your questions to our weekly broadcast, please email your questions to Martin Smith at askthebroker@UFXBank.com. For UFX Bank, I'm Lee Stone. Good luck and happy trading.